they I guess, feel more comfortable, more intimate.
Oh, that's fine, whatever works. Okay. Chris? Kevin is saying that they're wanting to present from the line, so
Okay.
let them do that if they choose to.
All right, I'll just sit down when you come down. And
Okay, let's give 5 more minutes and begin. 5 more minutes and begin.
Good morning, folks. We are expecting a very large turnout, possibly as many as 93 to 100 people this morning, so we're just giving it about 5 more minutes. We want to be respectful of your time, so we will try to stay on task as far as the agenda, but just give us about 5 more minutes.
They comfortable with switching between their PowerPoints? They know how to do that, or are you still doing that work? You like, we're going to switch between presentations. Are you gonna do that for them? Okay, and then while they're coming down, and then.
Thank you.
Well, good morning. Okay. Maybe one more time, good morning. All right, thank you, much better, much better. So Durham occupancy rates in downtown for office space is at 97%. For Class A office space. For Class B office space, it's at 83%. For Class C, 92%. The unemployment rate through September was at 8.1%. That's the lowest of any metropolitan area in North Carolina. With our economic development grant programs that were developed in conjunction with economic development partners in Durham and being administered through the city, new buildings are being upfitted, new restaurants are opening, new services are being provided to Durham businesses and residents. We have a newly renovated convention center, Durham Arts Council, and Carolina Theater in downtown. With the DPAC, we have the 9th highest grossing theater in the US for 2010 and the 11th largest in the world. And those figures are probably going to improve in 2011. It's impossible to find parking at the mall, and basically everything seems to be going well economically, right? Wrong. That's why we're here, because we know that there are businesses that can still use help. We know that there are developers that can still get financing for the projects that they want to get off the ground. And so with that, I introduce myself. My name is Kevin Dick. I'm the Director of the Office of Economic and Workforce Development for the City of Durham. And I cordially welcome everyone to our 2011 Economic Development Resource Forum. Today we have an esteemed panel of people that we think can help provide information and possibly invite you to take advantage of programs that can improve your bottom lines and drive economic development in Durham. And with that, I want to introduce my colleague and economic development partner, Mr. Chris Wallace, who will moderate our panel discussion for this morning. There'll be time for question and answers after the first two presenters, and then a time for question and answers after the second two. So with that, I turn the podium over to Chris.
Thank you, Kevin. Good morning again. Good morning again. All right. Without further ado, I'd like to introduce our first speaker. His name is Dan Stafford. He is my colleague at the Institute. Dan is the Compliance Director at NCIMED. Dan?
Thank you, Chris. Whoops, sorry. As I said, I'm Dan Stafford with the North Carolina Institute of Minority Economic Development. I'm sort of give you an idea of some of the major programs that we offer here. Can you help me with one more thing real quick? The Institute itself is, I think, is a great resource for a lot of companies. The Institute itself, as I said, is a nonprofit quasi-state agency. It's been around for about 25 years now. The president is Andrea Harris. We operate numerous programs. We operate for working with minority businesses, women-owned firms, disadvantaged companies throughout veteran programs, veteran companies throughout distressed areas, low-wealth communities, other low-wealth, and rural communities throughout North Carolina. So just to give an idea a little bit about, I have a little slide here. There was eventually a PowerPoint, but life got in the way and technology got in the way. So we went back to square one. We went to elementary school. So just to give you a couple, did have a couple of slides though that I want to share with you as far as some of the programs that we do. As I said, the Institute's been around for about 25, going on 25 years this April. One of the major events that we do is a lot of business development activity. The little bit on the slide gives an idea, kind of base. One major program that we operate is a Minority Business Enterprise Center for North Carolina that does a lot of technical assistance services to minority firms. And that gives an idea of since 2004, through that program and some of the other business development activities, I think we would just give you an idea of some of the successes that we've had as far as helping close to 1,700 job creations, 8,000 retained, close to 300 million total if you look at contracts awarded or financial awards, which means things like loans, bonding programs for contractors, lines of credit. Close to over 3,500 companies served and 15,000 folks trained, and that's just 2010 information. So 2011, there's probably adding close to, with those procurement, those finance dollars, close to about another 60 to 80 million will happen by the time the year ends out. I'm just getting at, what I'm trying to say is that through the programs, which I'll go in a minute, some of the activities that we offer, there's a good chance that we can help somebody somewhere, sometime at some manner in their company. As I said, we operate the Minority Business Enterprise Center program, which is a cooperative agreement with the U.S. Department of Commerce's Minority Business Development Agency. We provide technical and services to minority firms throughout North Carolina. We also operate the Women's Business Center program. Again, a partnership through the Small Business Administration for women entrepreneurs. A lot of their activities done through one-on-one type counseling and group session trainings. We have an education unit that looks at two primary components. One is a sort of a hands-on, detailed, fast-paced, growing graduate assistance program known as the Minority Executive Education Institute. That program kind of works with existing firms and tries to help them build their capital, build their asset base, and look in new markets. Another unit comes out of that is a financial and training event that's spent its time on three major components. One being college student initiative that looks like trying to strengthen the credit situations and the financial situation of folks in college, help them understand student debt better, consumer and also home ownership initiatives that kind of helps folks look at their credit report better and try to make sure they can maintain and keep themselves within their personal residences, understand their personal budgeting. There's a Plans and Resource Center program. It's an office that we just opened up about a year ago because we have a lot of companies, a lot of customers or clients that are involved in the contractual and construction fields. So this event allows access to various plans and specifications, things that they can take advantage of for that type of work, or for general contractors, subcontractors, other trade professionals, which can be done either physically in-house or also through a virtual plans room that we have set up. That's being set up physically right now in about 4 other cities, one in Durham, Raleigh, Greensboro, and Charlotte, and there'll be others throughout, in another year or so, there'll be others throughout the rest of the state. We look at, and there's another program the Institute has, which all of this will be found in more detail if you go to the website at www.ncimed.com. But one particular program is a Healthy Workplace Initiative that spends its time kind of looking at the disparities of health issues in the country, and also how health, education, wealth, economics, and employment all fit in together. They've done background work in prostate cancer work, they've done background work in tobacco cessation, diabetes, and several others. Another event that we have is also known, which is a major economic event that helps a lot of companies, is called the Executive Networking Event, which we do down in Pinehurst, normally on an annual basis. But we kind of try to bring in corporate companies come from all over the country, minority firms and women-owned firms and other firms come together, where you get a chance to network, get a chance to know somebody, get a chance to learn some additional techniques or methods you may not know. We've found, like through a program, sort of in some business development circles, there's always been a term that people will do business with people they know or act with people they like. And the more you get a chance to build relationships, then the great chance for contractual events or contractual other type of growth can come out of that. So, like I said, the biggest aspect of the program that we offer, a lot of the business development services, they also kind of fall in three primary categories. Money management and marketing. We try to, looking at some of the things I just mentioned, we try to find some way that, so wait, make it small. Okay. well, you can kind of, that's the reason I was mentioning some of the programs before. You kind of find a way that how it can be an all-inclusive circle that where we can assist somebody based on the clients, whether they can be provided business services, financial services, whatever the case may be. Through, like for example, through the Minority Business Program, the Women's Business Program, there's a lot of technical related services that can be done, such as financial packaging help, or help at developing business plans, or understanding the market, or understanding how to network, or how to do business with the city of Durham, or how to get myself certified with the state of North Carolina, or on and on like that. There's a couple financial programs, I'll give some information in a minute, that's known as like the bonding program and emerging markets fund that looks at some internal ways that we can maybe come in and help some folks with some troubles with financing. Through education, the programs, kind of like the Minority Executive Institute I mentioned a minute ago, they kind of help try to build a company, strengthen its strategic implications to make it even stronger than it is. So there's odds are that it's a whole, as I said, when a client comes through or a company comes through that we can help out, it's an all-inclusive circle where we try to fit in. Okay. One of the, I was getting into, like I said, some of the financial programs. A critical one that we set up a couple years ago, or actually 5 years ago now, is known as the Emerging Markets Investment Fund. It was pretty much set up to provide patient capital to help small minority women-owned firms in order to grow and sustain their operations. It looks a lot at contract financing. It's, the minimum loan size runs about $40 million. I mean, it's not $40 million, that'd be a great loan, wouldn't it? $40,000. $40 million on Christmas Day, but $40,000 the rest of the year. $250,000 is the maximum loan size. As I said, it's pretty much look at anyone who has a legal contract. It's pretty much like all based on contract financing. And if everything works fine, everything works good, it pretty much can move within 30 to 45 days. The little page there kind of gives, and that's the handout that was also, you may have had a chance to pick up if you didn't. It's out there at the front as well. But it gives a little bit of some of the overall contracting FAQs, some information about it. There's an application fee that runs $150 for it, and if it's approved, the money's applied to the closing costs. The information that's required to go through the process is some just basic, a lot of basic loan data that you may come across anytime you're making an application. Personal financial statements, a copy of the contract, breakdown of the cash flows or related projections related to that contract, as well as background history or financial data on the company, kind of business plan type information that you may need. Work in progress, insurance policies, and they'll also look at credit. Now, credit is looked at everything, of course, but it's not given the weight in this type of program as it might be somewhere else. More emphasis is put on the company's capacity, the company's ability, how well it can perform, or how it can present its case, that it can perform the contract and make its payments according to schedules. As I said, that program's been going around for about since 5 or 6 years now, and it's attributed to some of the numerical dollars that I gave a few minutes ago. There's additional programs that like I said, which I didn't bring with me, but I can get you more detailed information on them that you'll find. Add the website again. Really, like I said, the Institute is set up in a position to provide business services, through business services, through education and training, through networking, and through other relationship development processes to try to help and sustain communities and minority business and women-owned business throughout North Carolina. So we try to look in a way of whatever your issues, questions, concerns, or how the company, what's dealing with the company, what's affecting the company, where its primary things it's trying to find out to get done, we try to find the best way to fit in and help out. And that pretty much boils down to how we operate. Thank you. Thank you.
Thank you, Dan. As a reminder, detailed biographies on all of the panelists can be found on the back of your handout. And without further ado, I'm going to move to our next presenter. His name is Tom Wall. Tom is with the North Carolina Rural Economic Development Center.
Thank you, Chris. Good morning, all. I've not seen a list of attendees. I would just ask The Department of Commerce defines small business as any business of fewer than 500 employees. So with that as background, how many of you would consider yourself small business people? Wow. So that's good to know. Got the right audience. As Chris mentioned, I'm with the Rural Economic Development Center. This is one more test and then I'll talk. But how many of you have heard of the Rural Center? Well, that's good. That's the majority. The reason I ask that is the Rural Center was also started 25 years ago, coincidentally. But it's a really well-kept secret in much of North Carolina. And that's because, as you can see in the slide, many of the programs that the Rural Center performs and delivers are focused on rural North Carolina. And that's defined by our State Department of Commerce as the 85 counties you see in green here. I travel Wake County to Mecklenburg promoting my Capital Access program for the Rural Center. And you can see most of those counties are gray. And what I've learned is those counties don't know much about the Rural Center in spite of all the good work that they've done over the last 25 years. So I'm delighted that so many of you have heard of that good work. But it's important to note that this program that I'm talking about today is not limited to those 85 counties. In fact, it's 100 counties wide. And so I'm glad that so many small business people are here, and I'm happy to report that the program I'm going to talk about hopefully can help you. So the program, the Capital Access Program, came about as a result of some legislation that was passed at the U.S. level in late 2010, which allocated monies to states for them to use to promote small business lending, to promote small business employment. The state of North Carolina, Department of Commerce, went to the Rural Center and asked us to work with them to roll that, first to apply for that funding, which we did successfully last fall, and then to roll it out on behalf of the state, which we're in the process of doing. It's modeled after a program that the Rural Center ran from 94 to 2007, which was much smaller. You saw $46 million on the last slide, which is the amount we have in this program. Over those years, we had 3.6 million, which we successfully rolled out, and we define success as creating or retaining jobs. And you can see on the bottom of the slide, over 27,000 jobs were created and retained. The program is modeled much like that program, although the size is obviously bigger and there have been some slight tweaks. But it is a program that supports bank lending. So we are not a direct lender, but rather we are using banks as our channel, and we're working with banks to help them say yes to their borrowers. And the way we do that is we use a matched fee pooled reserve fund. And I'm going to explain the mechanics of that. But essentially, it is there that is built over time with each participating bank to reduce the risk in lending that they're doing, and hopefully to get them to say yes to the small business borrower. Eligible lenders are banks, credit unions, and CDFIs. It is very much a background program in that when you go into your bank and have a conversation, they are making all the decisions. They're following their process. But if they're a member, if they're enrolled in our program, they can use our program to support a loan that they would make to a small business. But again, they maintain the process and the decision making. We're very much in the background. And the way it works is, if they're trying to get to a yes, and they talk to their borrower about the possibility of using this program, and the borrower agrees, they can charge the borrower from 2 to 7% of the amount of the loan to enroll the loan in the program. When they do that, we match that 2 to 7%, dollar for dollar, in a reserve that's created at that bank. So if on a $100,000 loan they charge 2%, $2,000, we match that $2,000 and $4,000 goes into a reserve account. And that is pooled in that reserve account against any loans that they enroll in the program. So graphically, it looks like this. You see businesses across the bottom. And obviously, this is a pretty simple concept, but I find pictures make things simpler to understand. And you can see them charging at their discretion and the borrower's agreement between 2% and 7%. That going into the reserve account in the middle of the page here, and then the capital access program matching dollar for dollar into that pool, and then those funds being available should any of those loans that the bank make go bad and be charged off, the bank can go to that reserve and recover their losses. Another way of looking at that, in this graphic, if the bank makes 20 loans, you can see in green that reserve building over time. And if on average their loans are, in this case, $100,000, as they make loans through the program, that reserve builds at their bank, and they can get to a full coverage situation. So our hope is, and our early experience is, banks see that as a way to mitigate risk and to make loans that they otherwise might not be able to make. Now, what kind of businesses are eligible? Fewer than 500 employees, which is the definition of a small business. Nonprofits are permissible, and that's unique by government loan standards. That's at least rare. But we're excited about that, because from our perspective, whether a daycare is for-profit or not-for-profit, a job is a job. And we're happy that Treasury has agreed with that interpretation, and we've seen some nonprofit loans enrolled in the program. Loans up to $5 million are eligible. Actually, the loan could be $10 million, but the bank could then enroll up to $5 million of that loan in the program. So that's the limitation there. Owner-occupied real estate, equipment, working capital, so traditional bank lending, all is applicable. Term loans up to 10 years, lines of credit up to 7 years. So again, banks frequently will make 20-year amortization loans with a 5-year fixed rate and then a balloon and then reset it. So the first 10 years of that loan could be put into the program. On lines of credit, frequently a bank will make a loan for 12 months or a line of credit available for 12 months to support working capital of a small business. And at a 12-month anniversary date, we'll look at it again and likely renew. And in this case, if the borrower pays a fee day one and the line is enrolled in the program, it can be renewed up to 6 more times for a total of 7 years in the program. Again, oftentimes these are a little riskier for banks because the collateral isn't as valuable. It's often receivables and inventory and the like. So this helps mitigate the risk for the bank as well. There are some prohibitions. Banks cannot take existing loans with their small business that they already have on their books and enroll them in the program. Not surprising. This is not intended to be a get-out-of-jail-free card for a bank, but rather to stimulate lending. Passive or investment real estate is not eligible. And really the interpretation there is this is intended to be job creation, which generally passive real estate in the long term doesn't create. And there are certain other restrictions, and there are things that generally banks don't find onerous because they're things that banks won't lend to support. There's things like gambling or pyramid sales or the like. So again, the bank goes through its standard underwriting process, and they're looking for all the things that, if you've been into your bank talking, you've had this conversation. They're looking for character, credit, the solid business plan, the financials of the business, collateral, guarantees, etc. And it's going to be their decision. The program is ramping up. We've done numerous regional briefings across the state. We really began in about February of this year. In that time, we've enrolled 65 lenders. That represents 1,400 branches in 99 counties, a number of them here. And we're doing some publicity and focus groups to make the program more, refine the program. 67 loans so far have been enrolled by 15 lenders. You can see the kinds of loans there, and 597 jobs have been created or retained by those loans. You'll see the note at the bottom. Of that 46 million, that's supporting the Capital Access Program right now, but we are in the process of overlaying a couple other programs, and I can't get into details right now because they're in the approval cycle, but one of them will be a loan participation program, and that will allow banks to take part of a loan they would make to a small business and sell it to us. So we would participate in the loan, and we would take a subordinated position. And we think that might be up to a 20% participation in that loan. And in our preliminary discussions with banks who are enrolled in the Capital Access Program, we're getting a lot of positive feedback, because that is another way for them to mitigate risk and make more loans. So that's the extent of my presentation. There is a handout which hopefully you've received. It's very high level. You'll see on the back the website, which is the I'll read it. It's ncruralcenter.org, but you can also go to nc-cap.org, and there's a wealth of information there, including the list of all the banks participating. We have banks of all sizes, a lot of community banks, and we're starting to get some of the national banks to enroll. So in Durham, Mechanics and Farmers, Cardinal State, KeySource, Generations Credit Union are all enrolled. Wells Fargo just came on board last week, we're happy to see. And many of the other banks that have branches in the county have enrolled as well. So if you look at the website, again, nc-cap.org, you'll see all the banks listed there, as well as a lot of other information about the program. So thank you very much for your time. I appreciate your interest, and I guess we're going to throw it to questions. Thank you.
Thank you, Tom. It is now Q&A time, and before we get started, I should warn you that up under my suit is a striped shirt, so not only will I serve as moderator, I'm also going to serve as referee. So if you give any of our esteemed panelists too hard of a time, I'm going to give you a standing 8 count. So if you have questions for any of the panelists or about any of the presentations or the content that we've heard so far this morning, please step up to the microphone over there and direct your question to the panelist. Yeah, just so everyone can hear you.
Good morning.
Good
No,
morning.
I didn't say that. Question for Tom. I'm knee-deep in an SBA 504 closing, actually, that's supposed to be happening in about 2 days now. Just high altitude, how does this program differ from the SBA program? There seems to be some similarities in its outcome and the restrictions and the type of things that it can be used for. Just if one's looking at a project from a long way off and trying to decide which path to go down, how do they make a decision about which lending program might be better for the project?
That's a very good question. What Chris didn't say is I have this up here. I don't know why they gave me that. Very good question. First, congratulations on your progress, and good luck with the close. That's good to hear. SBA has a couple of programs that have been around for a long time and are very good programs. And I sit on panels a number of times with SBA speakers and have nothing but good things to say about those programs. And in some ways, we're complementary. I think the determining factor should be what your bank lender says will work best. The 504 is a great program, and I don't know if everybody's familiar with it. and I'm certainly not an expert, but it does great things in terms of interest rate, and greatly improves the ability of the bank to make loans because of the guarantee the SBA provides. The distinctions are very often SBA, because of the nature of the program being a guarantee, has a lot of requirements on the bank and the borrower. And you've probably gone through some of that. There's just a lot of documentation, and some banks are set up to do that, and they're expert at it, but others have not decided to incur the infrastructural cost, hiring experts and being able to process SBA loans. And for them, our program is much simpler to use, and so they might choose to use our program. So it really depends on the bank that you approach as to which program they might use. In addition to the 504 that you're looking at, SBA has a 7A program, and some banks are SBA express lenders, and to the extent they are, then the SBA 7A express lender, that program is much more similar to the one that I talked about than 504 is. But many banks are not SBA express lenders, and therefore they might turn to the CAP program because of its simplicity and, in some cases, lower cost to the borrower to use. Hope that answered your question.
Any other questions? All right, well, let's move on. The next presenter is Will Best. Will is from the North Carolina Department of Commerce.
Good morning. And, I wanted to definitely thank Kevin and Chris for everything this morning and for the introduction as well. Again, my name is Will Best. I'm with the North Carolina Department of Commerce with the Community Development Division, which actually houses, processes, and approves the current urban progress zones for North Carolina. House Bill 2170 was created prior to January 1st, 2007. Is that me? Okay. Began January 1st, 2007. Article 3J replaced the William S. Lee Act, which was previously the state development zones. It provided tax incentives to new companies and new businesses. The purpose of the state urban progress zone is to stimulate new investment, primarily in areas with greater than 20% poverty. So they're trying to target, we are targeting job creation in economically distressed areas. The urban progress zone requirements currently require a municipality to have greater than 10,000 in population. This figure is based on the state demographer's most recent figure and is not a United States Census figure. It must be comprised of current census tracts, block groups, part of. As long as it's a qualifying census tract or block group, you can create a zone anywhere within those qualifying tracts. The poverty level threshold must be greater than 20%. That's one way that you can qualify, that a municipality can apply and establish or designate an urban progress zone. You can also apply based on the contiguity of a qualifying tract. So if you are adjacent or contiguous to a tract that has greater than 20% poverty, you can apply for that zone. Along with that, you have a 50% non-residential requirement that no more than 35% of the area of that zone can qualify in this section. It is convoluted to see that on the page, and it would be easier to discuss it if I had a few more maps, but unfortunately at this point in time I don't. The third level, the poverty level, must be greater than the poverty level of the population of the state and the per capita income. And at least 10%, there must be a major plant closing, and at least a major plant closing within the last 10 years. We've only had one applicant in the state of North Carolina, and that was the city of Kannapolis that used Section 3. To qualify for these credits as a taxpayer, once the municipality establishes and designates an urban progress zone, as a taxpayer, you can qualify for these credits. The primary activities in the eligible businesses are aircraft maintenance and repair, air courier services hub, company headquarters that create at least 75 new headquarter jobs, call centers, electronic shipping, mail order houses, information technology and services, manufacturing, motorsports facilities, motorsports racing team, research development, warehousing, and wholesale trade. Some of those are very vague and open, but this is pulled directly from the statute in North Carolina. The credits for creating jobs, this is one of the ways that this is trying to stimulate development, economic development and growth in North Carolina. Eligible taxpayers must meet a minimum threshold of full-time jobs. And as you can see in the county tier designation, you have a job threshold of 5 under Tier 1, a job threshold of 10 under Tier 2, and a job threshold of 15 under Tier 3. In addition to those incentives that you receive as a county tier, under the county tier designation, the urban progress zone or agrarian growth zone, the job threshold is 5 and you have an additional $1,000. If the job is filled by a resident of the zone or a long-term unemployed worker, you can receive an additional $2,000. And that's in addition to, if your county tier is 1, you have a job threshold of 5. You meet that threshold, you have a $12,500 job credit. If you're in an urban progress zone, you can add the 1,000 as well as the caveat, an additional 2,000. You can also invest in business property. Eligible taxpayers can claim a credit based on a percentage of the cost of the capitalized tangible personal property. Again, it's the same situation where you have the tier status, Tier 1, 2, and 3. Also with the urban progress zone, the threshold is 0. If you're Tier 1, it's 0. With an urban progress zone, it's also a 0 in terms of dollars. You get a credit, 7% for Tier 1, Tier 2 is 5%, Tier 3 is 3 to 5%, and then automatically with an urban progress zone, it's 7. The final ability to do this is it. I'm getting a little bit of feedback. Am I not?
Because you're too far.
Okay. Thank you. I apologize. Eligible taxpayers that invest at least $10 million in real property within a 3-year period and create at least 200 new jobs established in a Tier 1 county are allowed a credit equal to 30% of eligible real property. So in this case, we don't have a whole lot of numbers here, and unfortunately I'm not an accountant, so it becomes a deeper application for anyone that claims the credit for investment in real property. And there's more information which I'll have for you in a few slides. North Carolina Department of Revenue has all the tax credits for growing businesses, and they have an annual report that provides who claim credits for creating jobs, investing in business property, as well as investing in the real property. This information is available, and this presentation will also be available to anyone that would like it. I would read that out, but again, we can hopefully provide that to everyone. The current Article 3J zones, urban progress zones and agrarian growth zones, I realize this is small, but we have, I believe, 27 existing that have not expired, but they're spread throughout the state. And again, these in the orange or the red, you can see they're greater than 10,000 in population, and then you have county agrarian growth zones. And being Durham, since Durham is a population greater than 10,000, we're discussing the urban progress zones. questions and contact information is there. Also, there's no applications required to apply for 3J credits. Just the only application that goes through actually is for the municipality designating the urban progress zone. Okay. Also, I would like to point out Joyce Smith. She's also with the North Carolina Department of Commerce, and she has information for our Community Link North Carolina. It's an economic development resource, and that number is 1-855-473-6333. And again, that's information for these urban progress zones and also with the other programs that we offer. I'm sorry? Yes. 1-855-473-6333. Thank you.
Thank you, Will. Before we move forward, we're going to have a brief overview of EB5 by Kevin.
Thanks, Chris. Before I provide that brief overview, I did want to do a few things. First of all, acknowledge the partners that helped put this together. Number one, North Carolina Institute for Minority Economic Development, and also the Greater Durham Chamber of Commerce. They were both instrumental in helping get this organized. Certainly cannot forget our City of Durham Public Affairs staff who gave us the very important information about the fact that we need to have our thumb and our pinky like this so that we make sure we're talking loud enough. So hopefully everyone could hear all of the presenters. And last but not least, to the Economic and Workforce Development staff that are here, excellent job, particularly Grace DeGinio for coordinating the event and keeping us all on task. So thanks to everybody. EB5, before Ben comes up, just want to kind of give I guess an executive summary of what Ben will present. Because EB5 is a foreign direct investment program. It's essentially a way for foreign investors to invest in larger development projects here in the States. The correlation between it's a correlation between foreign direct investors who are looking to invest in projects in the U.S., but who are also looking to immigrate to the U.S. So the programs actually run through the United States Customs and Immigration Service, and individuals can qualify for a more expedited visa process if they decide to invest in projects within the United States. So that's pretty much a Reader's Digest version, but I'll let Ben Cummings go into more detail, and I hope I did it a little bit of justice, Ben. All right, great.
Make sure I got that right. Good morning. I'm Ben Cummings. I'm your neighbor from slightly north of here. I live in Richmond, Virginia. And, but I do recently have become a property owner here in downtown Durham and have been enthusiastic about the redevelopment that has been taking place here. And that has encouraged me to come down here and start talking about the EB5 program, which has, Kevin has mentioned, has been a bit under the radar for many years. What I'd like to do is sort of tell you three things: a little more detail about the EB5 Immigrant Investor Program and about our company called Birch Capital. Show you quickly a couple of our larger projects that we're currently been working on, and then just finish by pointing out some important considerations for developers or people that are interested in these funds. Just as a quick overview, we're a real estate investment firm We have offices in Wellesley, Massachusetts, and in Richmond. And our goal is to provide returns for foreign investors as well as benefits to regions and communities here in the United States. What we do is we provide either loans or equity capital for qualified foreign investors through the EB-5 program that Kevin mentioned. This has been a program that actually has been in place since about 1993 by the federal government, but very little used and very little recognized until about 2008, when capital was pretty much unable to be acquired anywhere else. The program provides that qualified foreign investors can make investments here in the United States of either $1 million or $500,000 each and obtain permanent resident visas for themselves and their families to move here to the United States. The arrangements are generally used for real estate development and primarily have been used for larger projects around the country, although they have been used in projects as small as $2 or $2.5 million. They are generally structured as conventional United States real estate investment limited partnerships. We work with individual developers, with economic development agencies, in order to try and find qualified projects for these investments to be made in. And the projects can pretty much be any type. I mean, they can be any real estate type as long as they meet certain job requirements of the federal government and the Citizenship and Immigration Service. And in fact, they're quite a bit like the program which you just heard about in terms of having job creation requirements. We do have a couple requirements. One is that the projects must be located in areas of high unemployment or in rural areas. And high unemployment is defined as 150% of the national average. We can do this through economic studies using census tract information, but essentially that means that today the projects would have to be in an urban area, in an area that had about 14% unemployment. Or it can be in a rural area which has a population of less than 20,000 people and which is outside of a statistical metropolitan area. Part of our job is to work with economists to create the approved economic study to show that these projects qualify. The project has to be underwritten. I will tell you right up front, this is just, it's not just quick and easy money. I wish it were, we all wish it were. But partly it's not quick because it is a US government program and because it does involve the investors going through the normal visa process to qualify them to come into the United States as immigrants. As you can imagine, most of these investors are fairly sophisticated because these investments have to be at least $500,000 each. And so they have accountants, they have financial advisors, they look carefully at these projects to make sure that the projects are viable, that their investment will be a good investment, and that it can be returned to them in approximately 5 years. They also look very carefully at the job creation requirements, because if the jobs are not created as a result of the development, they don't get their permanent family visa and they have to return back to their home country. Just quickly, I'll show you, this was the first project we did. It was a very large project. We were fortunate to be involved in it. It is the first building of the University of Miami Life Science and Technology Park. And we created in January of 2010 what's called a regional, this thing's going ahead of itself, what's called a regional center, which is the entity that these funds are put into that then makes the loan to the developer. The University of Miami Life Science and Technology Park is right adjacent to the University of Miami Medical School, and we created this in one census tract, which was qualified by the state of Florida and the Immigration Service as a targeted employment area. In other words, meeting the high unemployment criteria. So the investments were, the minimum investment was $500,000. The project sold out in less than a year. It's about a 250,000 square foot building that was completed on June 7th of this year. As you can see, it was a large project. It was a $100 million project. We were able to secure $20 million of foreign investment through 40 investors, and we create about 400 direct jobs, and then about 1,100 indirect jobs as a result of this development. The I-526 is the conditional visa which is granted to these immigrant investors, and it's good for about 2 years. So they make their investment, it goes into the project. 2 years later, the Immigration Service comes back and says, did the building get built? Did the jobs get created? And if so, then the conditions are removed from the visa and the family can remain here. We were fortunate to work with a company called Wexford Science and Technology out of Baltimore, which is a very well-known company around the United States that does these medical and technology projects in various parts of the country. They've done them everywhere from Pennsylvania to St. Louis. This thing's just running away with itself. This is the finished building as of a couple months ago. And as you can see, it's a very, very large project. The reason I sort of point this one out to you, and actually our second project, which is going to be a very similar one in Baltimore, which is pending approval right now by the Immigration Service, is that both of these are medical technology research buildings. And of course, that's what's interested me here in Durham. On the one hand is that you are the city of medicine. You've got the connections with Duke University, with the medical center. There's a great deal of demand here for medical and office space. And this is the perfect kind of project that is understandable by foreign investors. They understand office, they understand the medical and technology parts of the business, no matter what country they are from. And they know that these projects create a large number of qualifying jobs. So this is our second project, again, very similar. It'll be right adjacent to the University of Maryland Medical School. Now, these are great, big, large, expensive projects. Everything doesn't have to be that big, doesn't have to be that expensive. But from the development standpoint, these are the considerations that a developer needs to be concerned with. Number one, we have to show through an economic job creation study that for each investor, each $500,000 investment, at least 10 jobs, direct jobs or indirect jobs, will be created by that investor in order for the investor to get their visa. Secondly, it must be located in the targeted employment area, which again is either the high unemployment area or a rural area. Third, the advantage to the developer is that this money is provided at a very low interest rate, and it can be used either as a loan, as debt, or as equity. And the interest rates are generally in the market right now 4 to 5% interest only for 5 years, at which time the investors want their investment returned. Here's the problem. The problem is the United States government. The Immigration Service right now has a huge backlog of approval of these projects. And so from the day we would start until the day a project could actually get funded is currently running about 15 to 18 months. The good news is that next spring, the Immigration Service has announced they hope to implement an expedited approval process. And it would be both for approval of the project and approval of the investor visas. And that could cut about 9 months off of this 15 to 18 month process right now. So today, this funding is best used for two types of projects. One is a project that's just getting ready to start and has perhaps 12 or 15 months to go through the entitlement process, the approvals, the negotiations, and then the funding could be dispersed about the same time that the project was ready to begin construction. Or a project that already has construction financing and is underway, but needs money to pay off that construction loan and become 5-year permanent financing. So those are the two best models for this at the present time. The last thing for developers to be aware of, and this is part of the due diligence and the investigation that the investors do, is they want their money back in about 5 years. If all goes well, the project gets built, the jobs get created, they get their visa and they move their families here to the United States, eventually they'd like to see their money back. They're just like the rest of us. They don't want to be investing in a project that is not a good quality, solid investment. Now, what I'll finish with, and perhaps should have started with, but you might ask the question, why is this EB-5 program even in existence? What's it all about? Why do these investors want to come to the United States? Well, there's several reasons, and of course, you know, the United States is still the land of opportunity for most people around the world. Most of these investors now are coming from Asia, they're coming from Central and South America, and they have one of several motivations. One is that many of them are business people who have viable businesses, or they've inherited a great deal of money, but they live in unstable countries. There are several of these in South and Central America, as you know, and these people are interested in getting their families and some of their assets out of those countries and into the United States. If you just happen to try and get on the visa list from a country like India or China or Venezuela, some of the waiting list for some of these visas can be 8 to 15 years. And you just cannot get into the United States unless you have some peculiar skill or other way to become a permanent resident. This is one way, if you have some money, that you can get a visa in about 2 years. And again, it's been a viable program here since the early 90s, so there's really no skepticism about it. The investors are checked by the U.S. Immigration Service to be sure that the funds are legally secured, that there's no terrorism money, that there's no illegal source of funds. These are qualified people who want to bring their families here for good reason and bring capital into the United States as well. The second reason is simply safety. You know, in some of these countries, rich people are targets now. They're targets for their families, for their children being kidnapped on the way to school, and they really want to get their families out of some of these suspect countries. The other biggest reason for them to come here is education. You know, as I'm sure you know from the universities in this area, particularly students from Asia are becoming more and more of the American university population. They come on student visas. The problem is when they graduate, they have to go home because their visa expires. And they really don't want to go home. And there is debate now about whether we should be making them go home. Frankly, we've educated these people in engineering, in mathematics, and chemistry, in those areas where we need qualified employees here in the country. This is a way for them to become permanent residents here and have their family here, or in fact, many cases, the parents will gift the money to their children who happen to be in maybe their second or third year of university in order for them to apply for a permanent EB-5 visa so they can stay here after graduation. So those are the reasons why they want to be here, and their primary objective is to get their visa. Their secondary objective is to get their money back eventually in 5 years or so. And their last incentive is really to get a very small interest rate return during that period of investment. So it is a project that has been helpful in these times when loans are difficult to come by or equity capital is difficult to come by, that sort of fills a gap in the last 2 or 3 years. It has been a very successful program in large cities and is now being rolled out to secondary markets, and hopefully, could be valuable to the economic development of areas such as Durham and other rural areas here in North Carolina. So thank you for the opportunity to present this to you, and I'll be happy to respond to any questions. We do have some handouts also available if any of you would like them at the end of the program. Thanks very much.
Thank you, Ben. So before we close out, we're going to have one more Q&A session. So feel free to ask questions to any of our panelists about anything that you've heard today.
Question here.
Okay.
Ben, does the EB-5 allow building reuse, or is it new construction only?
It does allow building reuse. Most of the projects that have been done around the country have been for new construction. But the program also allows investments into existing businesses to expand facilities, or in distressed businesses. If a business has lost either 40% of its business or 40% of its employees and is in the process of being restructured, these funds can be used as capital to revitalize a business. Now, it has rarely been used for that because those business plans are a little more complicated to sell to the investors. It's a little easier for them to understand, I'm making a loan on an office building, I'm going to get a mortgage on it, and I'm going to get my money back in 5 years. It's a little harder to explain an operating business to them, but it is able to be used for those purposes.
Step up to the microphone.
I just have a question for panelist Will Best regarding the urban progress zone requirements. I believe it was subsection 143B-43709. Was that a comprehensive list or a complete listing of all industries or businesses that could qualify for that program, or is there a more comprehensive list of industries that would actually qualify underneath of that program?
That list that I provided is pulled from our statute, the North Carolina General Statutes, and it is, I don't want to say it's exactly exhaustive. However, my advice with that would be to take that to your accountant and have them check it when you do file for 3J credits. This is an outline. Of course, there are a number of things that you could compare aircraft maintenance and repair to, and a lot of things you could do within those within each primary activity. But again, they are primary activities. So that being said, there may be other activities beneath each one that you can qualify for. But it would definitely be an accountant conversation.
Okay, thank you.
You're welcome.
Thank you all. Thank you all. I have two questions, if you'll allow me, Chris, to ask two different questions.
Go ahead.
Ben, thank you for investing in Durham. We appreciate that. Um, the issue there is that I believe I wrote down that you have to have a 14% unemployment rate, and I think that Kevin mentioned we have an 8.1% in this area. So are we excluded from that, or is there a way to get around the issue of meeting the unemployment situation?
Yeah, you do, as most places in the United States, if you look at the whole metropolitan area, you're probably at an 8% unemployment. What we look at is census tract by census tract. And we have looked at that. We've gone through the agencies here in North Carolina that approve these targeted employment areas. And on a census tract basis, there are a number of census tracts which essentially encompass pretty much all of downtown Durham and some portions of Durham County as well that are over the 14% requirement. So there will be limitations to some extent on where you could put this. You know, I don't think you could use this funding to build something on the Duke University campus, for example. But we've already looked at there are most of downtown Durham will qualify, and we can use an economic study to map the boundaries that will come within these targeted employment areas.
I think that's possibly good news. The other question I wanted to ask to Tom, in your presentation, you mentioned that the rural bank loans were not available for essentially refinancing. If I have a line of credit with a lender at the moment, I could not access your system, your money, to refinance my line of credit. That seems rather limiting, and maybe that's the way the legislation is set up. But are there ways for ongoing businesses that are already ongoing to access your money that might be cheaper or more readily available from a lender, for example, a line of credit?
No, that's a good question, and the motivation in the language in the statute is obvious, I think, in terms of not giving a sort of free handout to the lender. And the refinancing is a restrictive clause in the statute. What we've been informed is if you have a relationship with a lender and are borrowing under a line of credit, and if that line of credit has no drawdown on it at maturity date, in other words, a zero balance, and the bank reviews the credit and determines to renew and extend, that can be enrolled in the program. So that's a little bit of a nuance. However, if many times with a line of credit, it's kind of an ongoing, fully drawn facility, and in those cases, unfortunately, the interpretation has been that cannot be rolled over at the same financial institution. Now, at the same time, there's no restriction in going across the street to the bank's competitor and negotiating your best deal and having that enrolled in the program.
So you can refinance to a different financial institution, but it's not the same financial.
Absolutely.
So it's really not a refinance restriction.
Well, we're talking semantics, but just to be clear, it's to prevent an existing loan at a bank to being enrolled in the program as an escape clause. As I said, if there's zero balance on it and the facility is renewed, it can be enrolled in the program. Or if you go to another lender and negotiate a new facility, it can be enrolled there. So whether that's refinancing or restructuring or whatever you want to call it, those are the rules. Hope is that
Everyone,
clear?
let's make sure that any conversation or dialogue takes place at the microphone. All right? Go ahead.
Is that clear? Okay, thank you.
Kevin.
I guess this is more a point of clarity rather than a question. Going back to Will's presentation, there were a lot of references to Tier 1, Tier 2, Tier 3. Counties in North Carolina are subdivided into different tiers based upon the wealth of the county. Durham is a Tier 3 county. So when you're studying that chart, just make sure you understand that, because that will give the thresholds that you'll need to hit in order to qualify for UPZ in Durham. Now, if you're coming from one of the rural counties adjacent to here, they may fall into Tier 1. And Will, correct me if I'm wrong, but on the Commerce website, is there a listing?
There currently is,
Sure.
but I want to remind everyone, in January 2012, the new tier statuses will be released.
Okay.
And they should be available, I don't want to guarantee January 1st, but they should be available by January 31st.
Okay, thank you.
You're welcome.
And then the second point related to Ben's presentation, just want to make sure that everyone understands downtown would be an eligible area because it's adjacent to targeted employment areas, but some of those targeted employment areas are also eligible as well. So for example, census tracts within Northeast Central Durham, as an example, the unemployment rate there is hovering around 15%. So they clearly exceed the 150% threshold of the area unemployment rate. So just wanted to make those points clear.
I want to start by just saying thanks for being here today, bringing the information that you're bringing. I have a couple of questions on the EB-5 program, Mr. Cummings, and one of them is typical exit strategies. What are, I mean, that would, first thing I think about are condominium projects, but what's a typical exit strategy?
Generally, for the commercial investments, there either needs to be a business plan that says we're going to sell this project in 5 years and pay off the loans, or a cash flow analysis that shows that at the end of 5 years there will be enough cash flow or an increased valuation of the property to allow you to refinance and pay off these loans. Those are the two most useful ways to sell this to the foreign investors.
The other question I had to do with the economic study, the cost of the economic study, and who bears that cost.
The economic studies are not that expensive. There are really two studies that have to be done. One is a study of the targeted employment area to sort of develop your geography by including the proper census tracts and adjacent areas that the project could be built in. And the second one is a job creation study. We've done both of them for under $7,500 per project. I mean, they are not that difficult to do using a qualified economist. And in terms of who bears the cost, generally the developer will bear most of these costs just as they would if they went to a bank and got a conventional bank loan.
Thank you.
You're welcome.
Any other questions? Well,
If I can real quick. On the urban progress zones, I'll go back and try to study it further from what you was talking about, but sounds like maybe a little similarity with some of the federal hub zone programs, even though you're not looking at federal demographic data or federal related. So if a company, I mean, is there do any of those location or districts overlap with each other? If
No.
the firms within one, can they take advantage of some extra programs or something?
I don't know if they can take advantage of utilizing both zones at the same time. However, I don't know if North Carolina has any active, I'm sure if they have any active federal hub zones. And there were some enterprise zones, which again, there's quite a quite a bit of confusion with enterprise zones in North Carolina with the up zone or the urban progress zone and the agrarian growth zone. However, I can't speak for any carryover from the state zones to any federal program. I wish I could, but unfortunately I can't.
Check it out and see.
I had another question regarding the urban progress zone. Well, some clarification as well. You said that the Kannapolis was the only city in the state that's kind of using that program so far. And if so, I'm wondering, is there some commentary around why isn't it being utilized further so far?
The comment about Kannapolis earlier, they utilized one of the subsections to the application process, and they utilized the section that counts per capita population with poverty, as well as a plant closing and a layoff. They're the only ones that have used that, I think, because you have the requirements of being 10,000 greater in population and then being able to pull that information into the census tracts that qualify. The majority of census tracts we have that do qualify are simply greater than 20% poverty. And Kannapolis didn't quite have a situation where they had completely 20% poverty, but they did have the unemployment and the plant closing, which qualified them for that section.
Was that the Murdoch property?
I think it may have been more related to Pilatex,
Okay.
But I think that's what it was. I'm not really clear. Some of the information again is slightly confidential,
Right.
with their tax filings. We just work more with the applicant being the municipality.
Right. Thank you.
You're welcome.
Hi, Brent Lockwood. How are you doing? Not to be a stick in the mud, obviously we're looking at getting foreign capital into the United States of America, North Carolina. I think that's great. Does that preclude someone from investing that is here in the States that's not a foreigner and taking advantage of these tax credits?
Yeah, this program is limited to the foreign investors because of securities laws. So we can only sell the limited partnership interests to people who are outside of the United States through the EB-5 program.
So you got to be a foreigner to take advantage of this situation, all these tax credits.
Well, you do, but one advantage of this program is that it is a private program. I mean, essentially, our company pools this money together, acts like a bank, and makes a loan or an equity placement. There is no limitation to any other kinds of programs or any other kind of financing that you can do. So it would be certainly possible to have domestic investors put up some of the equity in the project. You can use new market tax credits. You can use, the project we did in Miami used recovery zone facility bonds, which was a stimulus program from last year. You can stack 3 or 4 or 5 kinds of financing on it, and some of that certainly can be domestic developer financing. But the key to this program is it's for people that need their visa. So it really doesn't, we can't sell an interest to somebody here in the United States.
I assume you're just one of the LLCs that are in the midst of this, a company that's profitable doing this. Other LLCs are doing it as well, right?
Oh, yes. Yeah, there are probably 175 approved regional centers around the United States that have been approved by the Immigration Service. There's probably only about 50 of those that have actually done projects so far. There is a great demand for good projects, and there are thousands of foreign investors trying to use this process to help get them visas.
Just one other question. Obviously, we're trying to get foreign money in here to help our economy, an infusion of money. The availability to be able to refinance or restructure your debt that's already existing with a financial institution here in the United States, it would seem to me that, excuse me, any owner of a business that's already got, a 5% $10 million loan with ABC financial institution, he can take advantage of this money. So in reality, there is no infusion of foreign investment, perhaps, in many cases. Seems to be it could just be mixing of the money. We're not increasing foreign investment.
You're looking my way.
Yes, sir. Yes, sir.
So I want to make sure I understand your question.
Okay. My question is, with the availability to refinance an already existing debt,
right,
most likely through a company, a financial institution here in the United States, you're now getting rid of that. You're giving that financial institution their money back, and you're now bringing in foreign capital. How have we increased monies into our economy if that happens?
Well, I wouldn't look at it that serially, I guess. From my perspective, and I've been in the private sector for most of my career, what I see these programs as are a menu of different ways to try and promote business lending. I think we would all agree that there is a problem right now in terms of access and availability of capital, particularly to small businesses.
Absolutely.
So I wouldn't necessarily line these up and compare pros and cons as much as try and determine if there's a program that could help me
it might help
capital.
our own financial institutions be more competitive then, which could be a good thing.
Okay, I'm going to end the seat here.
Thank you.
Okay,
Thank
we're out of
you.
time.
Thank you.
All the panelists will be available afterwards if you want to ask additional questions. So we'll now have our closing comments.
I'll adjust this down a little bit. First of all, I'd like to thank everybody for being here this morning. This forum is really a partnership with NCIMED, the City of Durham's Office of Economic and Workforce Development, and the Durham Chamber of Commerce. And we'd also like to thank the great speakers this morning. You all have done a great job. Sometimes you get us enthused, and sometimes you get us a little confused. But the key out there is, if you think there are some opportunities for you with these programs, just ask. There are people, there are staff members here that are here to help you and assist you. In the end run, we would like very much for great economic development and business development to take place. I'd like to really thank everybody also this morning for being here. At first I thought this might be a little bit boring, but I tell you, the folks who came up and asked questions really made it very interesting. You know, these programs each have their little nuances. There's not a panacea in here, but there's some great programs that are available to help you. And I think hopefully as you take the information, you ask some questions afterwards, you can walk out with some ideas and opportunities. That's the great thing about programs like this. And as you can see, once again, nothing is simple in this life, but it's a challenging time, but there are tools out there, and hopefully you'll once again ask the questions. Kevin Dick was kind enough to let me know that these presentations will be available on the city's web page at, oh Lord, we got DurhamEconomicDevelopment.org, correct? It's on his business card. Also, Grace DeZino has got this information. So if you want to go back and want to study it further, maybe look at the websites. The information's on the City of Durham's website. Also, if you're staying up late at night and you're looking for something really exciting to view, this forum will be replayed Tuesday at in the morning at 10 a.m. For 4 additional times. So visit www.dtv8.tv. So if you missed it the first time, you got 4 more opportunities to learn more. So on this note, I'd like to ask everybody to thank yourselves for being here, thank the panelists, thank the city, NCIMED, and the Durham Chamber. And let's go forth, do some great things. Thank you.